Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 6th of July. Cable sinks to a fresh 31-year low. The British pound resumed its carnage yesterday and continued to tumble during the Asian session today. Cable broke below the low it touched on the 27th of June to hit 128. The pair began sinking ahead of the Bank of England's financial stability report yesterday and Carney's press conference following the release. The Bank of England reduced capital requirements for banks in an effort to boost lending, while Carney reassured investors that the Bank of England will continue to take all appropriate steps to support the economy. Even though the governor tried to maintain a positive tone overall, he also said that some Brexit risks have started to crystallize, something that may have added fuel to sterling's collapse. News that two large British property funds denied their investors from withdrawing their cash may have exacerbated the negative reaction as well. Overall, market sentiment appears to have switched back to risk-off. This is evident by most Asian stock indices, which closed in the red today, and risk-sensitive currencies such as Aussie and New Zealand dollar, which slid. Meanwhile, safe havens such as the yen and gold extended their recent gains. We believe that this environment could continue in the near term, with unprecedented political instability in the UK keeping market uncertainty elevated. Sterling in particular may extend its losses amid speculation that post-referendum economic activity may slow drastically, weighed on by reduced business hiring and postponed investment decisions. Today, the Riksbank will hold its monetary policy meeting and expectations are for the bank to remain on hold. We expect officials to strengthen their easing bias moving forward, something that could bring SEK under renewed selling interest. We believe that Riksbank officials are likely to be patient for now, despite the hate and market uncertainty caused by Brexit, partly due to the positive reaction in both Euro-SEK and Dollar-SEK following the referendum outcome. Given that the weakening SEK is likely to act as a cushion that absorbs at least some of the potential market turbulence, and that it could also help boost the nation's stubbornly low inflation rate, we expect the bank to wait at least until its September meeting before introducing further stimulus. This would also give the Riksbank the advantage of observing to what degree the uncertain environment has influenced Sweden's economic activity and what action, if any, other major central banks such as the ECB may take. In the US, the Fed will release the minutes from its June monetary policy meeting, where the committee remained on hold and lowered its rate path projections for 2017 and 2018. Considering the outcome of the UK referendum, the reaction in the dollar at this release is likely to depend on how officials saw US monetary policy being affected by a Brexit vote. Immediately after the vote, Fed fund futures began indicating a small probability for a rate cut instead of a hike at the upcoming FOMC meetings. We doubt that the Fed will choose to cut rates, but we agree that Brexit is likely to delay the Fed's normalization path in the event it has seriously and lasting implications for global markets and the US economy. We have 5 speakers scheduled for today. From the ECB, we have President Mario Draghi, Vice President Vitor Constâncio, and Executive Board Member Peter Pryett. As for the Fed, New York President William Dudley and Board Governor Daniel Tarullo speak as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.